All right. So good morning, good afternoon, or good evening, depending on where you are. And welcome to the Trading Coaches Playbook. I'm Brandon Wendell, as the name says and the screen says. So welcome, welcome, welcome. Just getting everything set up. Sorry, I was running a little behind here. And well, we're all good now. So anyway, let's see. Change my background on this. That doesn't matter. I was just playing around with a few things. So basically, we're going to go ahead and get started here. Hopefully get a lot of good information out to you guys. Basically, before we get started, just need to remind you that we're just doing this for educational purposes. And I'm not a broker dealer or licensed at all. So everything I talk about, again, is for educational purposes. We'll look at the markets, look at charts, but I'm not making any recommendations on securities. So there is always risk of loss. No matter what we do, we can never eliminate the risk in markets. We just try to minimize and manage what happens. We're also not subject to any trading restrictions, so we can have positions in securities or initiate one at any time. And let's see here. Oh. Okay. So, sorry, I keep getting messages. It's been a busy day too. Today's topic, well, actually, before we get started, obviously, we got a lot of stuff going on. You might have noticed my shirt says E-mini Think Tank, and that is a program that I run on Mondays, Wednesdays, and Thursdays. And good afternoon, Kevin, and a few others. Names are recognized in here. Glad to see everybody here. A few of our students are actually in here as well, which is cool. But the E-mini Think Tank, as the name suggests, we trade E-minis. We trade futures, sometimes micros even, or standard contracts, but we trade them actively 3 days a week. And well, more than 3 days, but we're together at least 3 days a week. Additionally, there's a lot of education. Let me see if I've got my browser open. There it is. And I forgot to open up the page, but no big deal. I'll do that real quick. And E-mini Think Tank, there it is. So when in the program, it's like I said, it's a lot more than just the live trading. There's a lot of basically self-paced education on demand. So you can go in, and the courses, if they're you can't make the live ones, they're all recorded. But I also have a lot of bonus videos that I'm going to be referencing today because there's a lot of education there. And you can learn these. If you don't know where to start, I actually do have a document, because all these educational pieces come with supporting documents that help you understand it. And one of those documents is what is here. So it kind of explains, what's available for you for education and what kind of path you should take as far as viewing them and utilizing them. And of course, the nice thing is I'm always available for my students. They can contact me right here by logging in and sending me a message directly. The other way, if you have any questions about anything I go over today as well in this education, you want to learn more, you can just email us at support@wealthbuilders. Let's just spell it right now. HQ.com. So there you go. I put out that email address. So you always get a hold of us. But anyway, what I was getting into is that there's a lot of really cool tools and calculators. One of those is rating trades or trade scoring. And believe it or not, I was actually just working on that Excel spreadsheet a little bit more right here because I'm updating it for the classroom for the students. So if you end up joining the E-mini Think Tank, you get a lot of extra education along with the support that goes along with that to kind of guide you and mentor you in the markets. So that's my little soapbox. I'll step off that. And again, you can stay in touch with us. We're all over all the socials, obviously. And I mentioned my courses. The one I'm talking about the most today is the E-mini Think Tank, because one of the things we do in that class on a regular basis is identify opportunities based on certain strategies. And not every strategy is going to work. I'm not afraid to show winners and losers. I track every single position that we look at. I'll just maximize this. This is my tracking sheet right now for our E-mini Think Tank for the month of June. And I'm got to update a few more things, but as a matter of fact, there we go. That was one. So what happens is every trade idea, or basically what happens is there are educational ideas that every day that we get together, they get emailed to the students, and I also show it in the classroom. So I'll show you the most recent one. For instance, this was 6/20, which is yesterday, trade ideas. And basically I have these educational ideas where we can look at them and see, okay, for instance, crude oil. We were looking to go long on crude oil in a 60-minute chart, and the times vary. Sometimes they're intraday. You can see some 15-minute trade opportunities that were identified on currencies. Sometimes they're much larger time frames. These were mostly day trades. Excuse me. Copper. And of course, not everybody's account is the same size. So you have the opportunity to trade with either the full size contracts or micros. And if the numbers might be a little different, I put those out. And very importantly, you need to know how much are you risking by getting into that position, and is it worth it for the reward you could possibly get? And as I mentioned, not every trade's a winner. Let's see here. Where'd it go? So we track everything, winners and losers. And I've got to update the most recent. We actually did not get into either one of those currency trades. And that's another thing. Not every trade can be entered, even if it seems like it's going to be a quality opportunity. And we're going to talk about how we rate those as well. But if you look at the education area and the documents in the E-mini think tank, yep, that was it, sorry. Let me enlarge this a little more. You can see when trade ideas should be canceled. I actually have a list that's available for the students to download, and I constantly go over it in the classroom as well. And there are certain key reasons why we would not enter into a position. And those are also noted right here, where it says reason. Why did we not enter the trade? Well, it hit my target before entry, or the momentum was wrong, or there was a problem with the trend. And those are things I usually discuss, obviously, in the course. And it is a course. I mean, we're looking at the live markets and identifying opportunities that are out there. And, I take them in a simulated mode to be able to show everybody the order entry and whatnot. But of course, we're also available to do live trades in our own personal accounts. But I want everybody to learn how to identify opportunities properly, evaluate those opportunities, and correctly put in those orders, both to get in, manage, and exit the positions. So doing that in a simulated mode lets you focus on the execution rather than worrying about the money. That's a really nice thing. And of course, as I said, not every trade works, but the nice thing is, actually, what do I have so far? For this month, 66% win rate, so 2/3 basically of the trades that are entered. Notice there are a lot of trades that don't make entry. I can zoom in a little more over here. Maybe. We got 17 no entries so far. And that happens quite often where there's a lot of no entries. And for the reason why we don't have to win all the time is we either don't enter the trade if it's not high quality, or if we do take the position, the average loss is typically much smaller than the average win. You don't need to be right all the time. You just don't want to be wrong very big. So that's just, again, that was just this month so far, which is still going on. Let me see if I can bring up an older one. Just kind of check it out randomly. Open. That's the first one I'm going to find. I have no idea. April. Okay. I have no idea what happened in April. I'll bring that up. And here it is. Found the April before May for some reason. But again, we track them, what's going on with the position, why we did get in or didn't get in. I also updated on the PowerPoint as well and share that in the class. But that's how we learn, from doing and seeing the results and analyzing everything. This time we had 51 no entries. There were a lot of no entries. Unfortunately, didn't do quite as well, 55% win rate. The losers were still smaller than the wins, but not as good as I typically like. And you can see there's still overall profit if you took every single trade. Now, to do that, obviously, it takes a certain amount of capital, whether you do micros or full size or E-minis, right? So I put out, the average account size, if you have reduced margins, about $15,000 would cover all full-size contracts. Again, micros, you could probably cover the margins required for the overnight and intraday with maybe $5,000. And the rate of returns would still be the same. It's just a smaller size, obviously. I'm just going to try to find, I forgot to open it up earlier. Let me see. Just to give you an idea of the overall. Is this the one? Yep, I think so. And I need to update a few. No, I guess it's pretty updated here. Let's see. Just to give you an idea of how it's been going. Like I said, I've been tracking this for years. So going all the way back to when I first started doing the E-mini think tank, not when I first started trading. I've been doing that for a while, but you can see we started in July of 2020. There's nothing else to do. Couldn't go outside, right? So just trade. But for the year, 72% win rate was pretty good. And then continuing on, I ended up, I think, no negative months there in 21. And the win rate was a little lower, but still doing quite well. 71% win rate again, 2022. And then I think in 23, did I have a negative month? I don't think so on this one. No. Worst month was December. Nope, still haven't had a negative month yet. That's good. And again, my average win rate is a little bit lower, but the win rate the profit size is actually pretty good. So I think I compared, that's just the overall. I was trying to see yearly. I guess I didn't do that yet. Let's try and take all the averages yearly and put it side by side so you can see them, but that's okay. Anyway, enough of that. I'm going to get into, like I said, the educational material that I was going to talk about, and that is rating the trade. So for instance, let's take a look at, is it still open? No? Bear with me. Too many things here. So scoring trades, identifying opportunities. And what was that? There we are. So just imagine you got, what happened? Just imagine you got your email or you were in the class and we saw that crude oil was a trade possibility. Okay, well, just because it looks pretty good, $320 potential risk for 1,600 potential profit, right? We're over what, 5-to-1 reward to risk. That sounds pretty good, at least for the first target. It doesn't mean that that's going to be the best trade to take or that we should even take that trade. What we need to do is evaluate the position and make sure it's right for us. And that goes for every single position that anyone looks at. I want you to evaluate those, not just simply rush in just to take a trade. So where did I put that document now? There it is. So again, I'm revising this right now. You'll see it says 2024 scoring. And my scoring system obviously goes hand in hand with the education and also the way I personally trade. I don't teach something different than what I actually do with my own accounts. That'd be silly, of course. So there's a couple different things we need to look at. First, when we look at a position for crude oil, again, in the 60-minute time frame for the trade, there's actually another opportunity at a different zone that was a little bit higher. So I think that one might be, that one was a little bit closer to the entry area. So we'll take a look at that first. It's a 60-minute chart. That doesn't mean that I only look at a 60-minute chart. So let's go to where that is. Restore. There it is. And maximize that. Refresh it real quick. I know. There we are. 60-minute. Come on. A little funky with this program. Does this weird thing where it expands the bars to the right if you use background dragging. So let's try this again. There we are, finally. All right. And let me delete this because that's not part of it. So in a 60-minute chart, again, there were two trade ideas that were identified. The first one is in the blue right here for the 60-minute demand. That's the 79.55, 79.80 demand zone. And then during the class, we were together on Thursday. What happened was that we noticed that prices were doing something else and creating a possible zone a little bit higher. And therefore, I identified, okay, well, maybe we want to trade that demand because we have to get to that first. It might bounce before we get to the lower zone down here. Okay. Now, this is what's called my zone time frame or my trading time frame. And if I only look at this one time frame, I'm doing myself a huge disservice because I need to get perspective. Proper perspective is very, very important. What if I only look at this time frame and it looks like it should be able to go up quite a bit, but I don't realize I'm getting, well, imagine this, picture this. When you run, especially if you're indoors, if you run, you keep your head up. You don't look at your feet, do you? Because if you were to look at your feet while you're running in the side of your house, you might run smack into a wall. You didn't see it coming because you didn't have proper perspective. Here, the walls are the bigger time frame zones. And you'll notice if you haven't been trading with me before or looking at some of the stuff, I don't use support and resistance. Okay. The way I look at markets, I am looking for where there is supply and demand from institutional orders. And that's a whole other thing. As a matter of fact, again, kind of promoting under documents right there, I've got the leg-based zoning technique. Actually, I got the new version of that needs to get posted. And also the class. There it is, trading routine and finding zones. And I'm re-recording a lot of these right now as well, all these lessons. So I'm freshening them all up and recording those while we're in a live classroom. So you get that benefit of the education live, as well as be able to review it and documents to help you out as well. But anyway, looking at the zones, I don't want to run into a wall. I want to make sure I know if a wall is coming so I can prepare for that and either not take the position or adjust my targets. So it all goes back to, I read a book on trading many years ago by Dr. Alexander Elder. I'm not sure if anybody's read it. He revised it. It's called Trading for a Living. And in Trading for a Living, he mentioned that all markets, they have relationships in different time frames. So if I'm looking at a 60-minute chart to trade, I want to get perspective from a bigger time frame, but it's got to be related. If I jump from a 60-minute chart to a daily chart, there are going to be time frames and trends that I'll miss. Time frames that are influencing this particular security. So as an example, there it is. My zone or trading time frame. Oops. If I'm using 60 minutes, basically what Dr. Elder mentioned is that all time frames are related by a factor of 5. So, not always using 5 because that's not always the best time frame. I want to use ones that are very, very common. So what I will do is multiply by 4, 5, or 6. So I have what is called my trend time frame. And the trend time frame in this case is going to be a 4-hour chart. And basically the trend time frame is the zone time frame multiplied by either 4, 5, or 6. And that gives me an idea of what trend is influencing the zones that I'm trading on. Because when you think about it, if you're in a strong bullish trend, you will probably break through selling areas, supply areas. But if you're in a downtrend, those will probably hold, but you'll probably break through strong demand or buying areas because the trend is down. So we want to typically trade with the trend, not against it. You surf with the waves, not against them. It's much harder. You can do counter trend trading, okay, but you have to be good about it, wise about it, smart about it, I guess I should say, but you have to make sure that you're doing it correctly and taking advantage of those and understand the risk that comes. Typically, trades that go with the overall trend are going to be much more profitable and have a higher probability of profit. Counter trend trading can work, but the risks are elevated, so you got to make sure that the reward is worth it. That's all. Now, I'm not done because I didn't mention the walls. I know which direction I'm running. Okay, I know where I'm starting and where I'm likely to stall and maybe take a breather, but I need to know where the walls are. So in that case, I'll look for what's called my perspective time frame. And in this case, it's going to be a daily. And basically, the perspective time frame is equal to the trend time frame multiplied again by either 4, 5, or 6. And it does not have to be the same multiplication. You can use 4, 5. In this case, I use 60 times 4 is 240. 240 times 6 is a daily, 24 hours, right? You saw a meme the other day that said trading against a trend is like getting punched in the face. Nice one, Trip. Well, it can be, but it doesn't always have to be. Sometimes they're wearing a very soft glove. Sometimes they're wearing or not, just taped up. So you can get hit pretty hard. but yeah, maybe it is. Anyway, so if I'm going to trade this on a 1 hour time frame, again, that's my trading time frame, I'm going to be looking at the trend on the 4 hour, and I need to know where's the wall that's going to halt that uptrend and cause it to either pause or reverse, and I'll find that on the daily. And the reason why I brought that up is you notice, or may have not noticed, when I go to my trade scoring system, I have environmental conditions, trend direction, intermediate time frame. That should actually say trend time frame, because that's what I refer to it as. So there. And if I trade with the trend, I get points. If I trade sideways, the trend is just neutral, kind of go back and forth, it's still okay. You could buy the low, sell the highs. But if I'm going against the trend, 0, right? There's nothing there. I actually should probably add that line in, to be honest with you. There we go. Yeah, I could probably fix it later, but against the trend, or yeah, I'll just say no. Now, counter trend, that's the right way to say it. Counter trend. There we go, 0. So there we go. And the maximum score is obviously 2, as it says right there, because you're either trading with the trend or against the trend. Well, let's take a look. We go out to our 60-minute chart. Again, I was looking at 2 possible areas to buy. I would go to the 4 hour time frame. And shrink that down a little bit. Get the text out of the way for now. And before the entry would have been triggered, let's see, that was 9 a.m. on the 20th. Okay, perfect. That's when the class was starting. You can see that the trend looks like it's up, doesn't it? We look like we got a bullish trend. But again, I got to look at the overall perspective. And we can see we're coming up to some prior highs over here. No big deal. But we were in a big downtrend. But as of right now, that is definitely an uptrend, isn't it? So we're pushing to the upside. We're making higher lows and higher highs still. Now, I didn't say anything about the strength of the trend or weakness of the trend. That's going to be something else that we will look at. But as of right now, we're in a bullish trend. Just keep it simple. Step 1, we're in a bullish trend. We're looking to buy, so that gets a 2. Great. We now move on to the next one. Profit potential. I need to identify where I'm getting in, where I'm getting out on my zone time frame, that lower time frame. Well, I could actually go back to the scoring of the trade itself and get that, but not if I do that. We have a potential loss or risk of $340. The potential gain is $890. Okay, so let's see here. Missing a tool. There it is. I'm going to cheat. But we have 890 divided by 340 for the risk, and I only have 2.61 for my first target. So that's something I have to consider. Am I willing to take that? Now, if I have a really high probability trade, I may be okay with taking a 2-to-1 or even a 1-to-1 reward to risk. But if the probability of the trade is lower, I should really strive for a much bigger reward if I'm going to take any kind of risk. So here we have 2.61 to 1. If we take a look at the spreadsheet, you can see 3-to-1 gets half a point, 5-to-1 gets 1. Well, we're not even any one of those. So I'm going to give myself a 0 because we're only at what, 2-to-1? Where did I go? What did I do? 0. There it is. Okay. Next, field of play. This is that perspective I'm talking about. You see, it says perspective time frame. I don't know why it says it twice. What's going on, There we go. Anyway, perspective time frame. So I go back to my chart, and I'm on the 4-hour chart. So I jump up to the daily chart, and what I'm looking for is there a wall that I'm going to be hitting? And there may be, actually. Looking from current price back here, you see there is a lot of selling pressure right there, and it looks as though we could be hitting a supply zone from the daily time frame. That's not a good thing. Copy that, bring it over. And one more thing. change the color so I know it's from that higher time frame. You can see we got this rally, base, drop, and that's a problem because basically we're running into a wall potentially with this trade. I'll go back down to the 1 hour trade time frame, back to where we are currently. And I'm not entering this trade, by the way, right now. There's other reasons, but that's one of them. That's a problem. We're running right into that wall. Now, there actually, I should put in, there's a bit of a caveat there because as we're running into that wall, we actually do have a lot of bullish momentum. And that's suggesting that we are only going to be experiencing a pullback before prices might be able to continue. And when I start looking at higher time frames, it's not in this document yet. I'm adding more things to this to help with scoring and making sure we're good. You know, trading honestly should be boring if you're doing it right. If it's exciting and you're jumping in and getting out and you're screaming at your computer all the time, you're probably doing it wrong. You're probably losing money. Trading is a lot like fishing, where you go out and you bait your hook and cast the line and you wait. And then when the fish is on the hook, then you're having a little bit of fun perhaps. But in the meantime, you're sitting there and drinking beer. Now, I don't drink beer while I'm trading. I've got my LaCroix. But most of the time, if you're think about professional fishermen, they spend a lot of time preparing. They have the equipment that tells them where the fish are likely to be. They've got an idea of what kind of day, what time. They've prepped. We need to do the same thing with trading. We need to prep so that way, yes, it does take a bit of time to put together my analysis compared to how long I'm into the trade. Sometimes, if it's time and effort into your analysis, you're more likely to have positive results. So you see there's some bonus points there, but I'm actually adding some additional bonus points. And one of those is when it comes to longer term, I also want to take a look at what's going on with the seasonality, especially when you're trading commodities. There's an article, I was just reading a little while ago. People were wondering, are traders going to sell off this big bull rally in crude oil? Because we're hitting that daily supply right now. Momentum says no, this is just going to be a pullback. But there are other things that we can use to help increase our odds for success. And one of those would be the seasonality of the security. And I talk about that in my class as well. I think should be in there. Let me see. Whoops. What's going on my computer? It's like locking up here. That's not good. I think I might have too much open. There we go. And just this bonus videos. Yeah, there it is. Seasonality of futures. So I did do a course on that. I'm going to be repeating it as well, obviously, because it's good information. But that's one of the things that we can do to see, is there also, is this wall going to hold? Is there a seasonality concept that's going to push us through that wall? Do we have help for this long? And I don't know if there's a tool on this particular platform. I have to look. All studies. There's so much. I doubt they have any kind of seasonality on this, but they might. No, I don't see it. But anyway, I use some external tools for that. One of the ones I use is MRCI. I was actually working with that earlier today. And you can copy my password right there, ... Anyway, I can look. If you're interested in using this website, by the way, MRCI, there's a 10% discount that you can get only on the annual subscription. If you go here to purchase subscriptions, I'm not saying you need it, but if you click on that purchase subscriptions online, this one, the 12-month annual, if you go to buy that one, oops, I forgot, where was it here? Add to cart, check out, and where is it here? Oh, how'd you hear about us? If you go there and you say Brandon, WBHQ, they'll give you 10% off. So anyway, it puts it at, I think, $341 a year. So the discount code is just my name and WBHQ, Wealth Builders HQ. Anyway, if you don't need it, don't go out and spend the money. You got to understand. And by the way, I also did do I think I did a video on it. using MRCI and season algo, which are the tools. No, I didn't do a video. I did a document on it somewhere. Anyway, I think it's under seasonality. So getting back to what I was talking about here to kind of give me an extra odds enhancer, if I will. Where's energy? There we are. We're looking at crude oil. We're currently in the August contract. And looking at crude oil right now, shrink this down. I'll just use the last 5 and 15 years and bring this bigger. Where are we here? Oh, wait, not there. We're here, June, July. So in June and July, typically crude oil continues to rally for a bit until about the 21st. And what does it do? It pulls back before it continues up again. That's the historical move. Even here, the last 15 years, we had a bit of a pullback before we started to rally again. Well, what did I just say is likely to happen on that daily chart? I said it's likely to just be a pullback before it continues to rally. Now, our job would be then to figure out, okay, we have a little bit of a wall, but it's broken up. It's ready to crumble. So we took one hit on the wall. We're possibly going to pull back. And when we go back up again, is that trend going to be strong enough to break through the wall? Well, I evaluate that trend. And again, you see some weakness here. I use the RSI, by the way, and it's modified a little bit. Of course, I've got all the information on that in the class as well. But right here, you see how momentum is dying off as we're moving up, but we're still in a bullish trend, and that's not being threatened. So this trend is likely to bounce. I just have to find where it's likely to bounce. So even though in my scoring, right here, the field of play, we are close to a wall, I still might have an opportunity to continue on in that trend, but it's still not the best odds. And here's one of the reasons, or not the best, step it back. The way I'm going to score this is based on where are the walls, but not just the one in front of me, but also the one behind me. Typically, if you're pretty close to the beginning of the trend, you're likely to be able to capture more of that move and you have more potential profit. Where I'm sitting right now, where I'm near the top or even at the top of that field of play, I have a higher probability of losing money rather than winning. Okay, so what I can do is first I have to find my zones. I already found the daily supply. Actually, let's do this. Get a fresh chart. CLQ 2024, daily, boom, there we are. And remember, I identified this as the supply on the daily. Now I need to find my nearest demand on the daily to let me know where's the field of play. Where are we likely to move during this trend? Well, starting at current price, looking left and down, this might be it right here. Okay, and if that's not it, I would say this definitely is, or even the bottom of the move. But we'll use this one right above, and I'll zoom in a little more in that area. And all I have to do at this point is identify from the white space between those two. Let's see, that's 81.37. That was close. There it is. And I need to divide it into thirds. 33.66. I'll change the color. Oops, come on. Oh, that's not what I wanted. That was the lines. Background. There we go. And one more thing. There we are. So basically what I'm looking at is that area between the supply and the demand on my prospective time frame. I'm dividing into thirds, and that's giving me an idea of where I am in that field of play. And if we take a look, if we're in the lower portion, the bottom third of the field of play, basically I have a lot of opportunity in this area potentially to make money going up. But shorting, if I'm in this area, doesn't give us as much opportunity because it's likely to reach the bottom, the floor, and bounce. If we're in the upper portion, top third of the field of play, well, there we don't have as much room to go to the upside. We got plenty of room to go down, right? And it's okay, Brenda. Yeah, you missed a little bit. If we're in the middle, then it's obviously we can go possibly either way. So in rating this position and grading it, we're looking at a long. So I'm going to focus on these three. And we're looking at not buying low. Buying low would be down here in the bottom third. Okay, we're not buying in the middle. We're actually looking to buy in the top third, right? We're buying high. That gets 0 points. There we go. So far, I've got trading with the trend at least. That's one good thing. But my profit potential is low. It's only about 2.6 to 1. And we're near the top of the field of play. Well, hopefully it breaks and we're able to expand the field of play. But right now, it hasn't done so, right? If we expand the field of play, it's not even a great supply there. I'd even go back further. So far, the scoring is not great. We probably would have a better score if we were in a downtrend high in that field of play. There you go. Now, I'm done with that bigger time frame for now. I'm going to go back to my smaller zone time frame where I'm trading, and I want to see how strong is that zone. And we're going to start looking at zone structure. And honestly, this one should probably be zone structure as well, but keep it where it is. So I'm going to go all the way back here to my 60-minute chart. And we can rate this one. Happen to be hitting the zone right now anyway. What I'm looking at is the area. I'll use this. Kind of focusing on that area right there when we left the zone. Now, first of all, when I identify zones, I do have certain structure for a zone. Not every zone fits cleanly into that, unfortunately. There's even a tool that I share here with my students. I already have it on, but if I go into studies, right here, I have something called base isolation. And I share that, like I said, in my class, but it identifies potential zones. So it highlighted in blue, saying that, hey, that might be a possible demand zone. And it wasn't great, but it did hold. That area did provide a bounce. But you notice the one that I'm looking at right now wasn't marked. So not every single one is going to fit right into that structure, but having those rules and that structure lets you find a lot of high quality zones, and it gives you a basis on how to start. Plus, the more structure you have with your trading, the more consistent you will be. And that's something that's huge in trading. You need to be consistent. If you're consistent, you're repeating the same actions over and over and over again, you should have consistent results. If those results are positive, that's what you want. You want to keep doing that. If the results are negative, meaning you're losing or not doing as well as you want, at least you know how to start fixing it. You start working on that plan and that structure. So looking at this area right now, what I'm doing is trying to figure out, as we left this area, did we break out a prior high or a prior low? Well, taking a look right here, again, I'm only focusing on the move out. It's not just one candle, by the way. It's multiple candles. I'm looking at, well, it could be one if it's a big candle, but I'm basically focusing right there on that area. As we left that area, do we break out of a prior high, or if we're selling, do we break a prior low? Come on. There you go. Well, could draw a horizontal line, and you can see right there on the screen, we broke that prior high, obviously. And I don't know if we broke any more behind it. Doesn't look like we're pretty much at recent highs. Actually, might as well grade this one as well. Remember, this was the original trade idea, and the same thing. On this move out, did we breach prior highs? Absolutely, we did. That typically means that there was a lot of imbalance. And really, that's what I want to trade. Imbalance between demand and supply. If there's very little supply in this area, or there was supply before where we sold off, and we break through that, that means there's a huge imbalance. There's not a lot of sellers there anymore. And there may be enough buying pressure left over to push us up again. That's really what I'm doing, is trying to figure out where do the institutional traders get in or out and just piggyback on that, because they have enough money to move the markets. I just want to follow it. So looking here at either one of those, so I'm going to rate this upper one that we first started talking about. It did break a prior high. Okay, and actually this should be for demand. And this is supply. You want to see it break out of a prior high or prior low. Well, we did. We got one. You know, some of these are rated higher than others. Okay. And you'll notice the max score for profit potential is only a 1, while trend is a little bit more important. Okay. And same thing with field of play. That's a 2, but move out is only a 1. So do we need to break a higher low? Not necessarily, but it does lend itself to a little more strength for that zone and a higher rating. Well, now we're going to focus on the zone itself. And, you know, we're on the zone time frame looking at the actual zone. One of the things I just mentioned is that I'm looking to piggyback on institutional orders. And if you go, I think they might have posted it in our YouTube channel for wealth builders. I did a bunch of workshops like this before. And I talked about how the orders work and why we have supply and why we have demand. So basically, I'm looking for leftover orders. If prices spend a lot of time at a level, there won't be as many leftovers, if there's any at all, because price spent too much time at that level, all the orders were filled. So I don't want to see a lot of candles in an area, because it means orders were filled. I want to see very few, 1 to 3 candles in the basing. Is this formula something like risk reward calculation? No, risk reward is actually only one piece of it right there. I am using this analysis, this rating, to see, is this a high quality or low quality position that I'm looking to get, a trade that I'm looking to get into. And by the way, you'll notice I'm using futures, but I didn't say it only works on futures. Charts are charts. I could do the same analysis on a stock. Right? If I go out to Tesla, say we go down to a 60-minute chart, you know, I can look for zones and trade opportunities and do the exact same thing I was doing on the futures. All right, here we have a possible demand. Actually, I'm going to save this thirds. There we go. That way I have a template of it. So right there, I have a demand zone, possibly. I could probably narrow it down a little bit. Drop, base, rally. So if it returns that area, I'd look to buy. Well, I could do the analysis here. Or Euro US dollar, Forex. I can go out to a weekly time frame. And same thing, I could look for demand and supply here and do all the ratings and everything else, and you know, for whatever trade you want. What time frame is best to find zones? Whatever you feel comfortable with. Yeah, I always kind of say that you want to trade on the highest time frame that you feel comfortable trading. What the heck does that mean? Well, looking at the zones, and I just kind of picked this one. I didn't really see if it's a good zone. Actually, that's not the best one. This one's really good down here. But look how wide it is. 99, 75, 97, 301. Okay, so we're looking at how many pips? We're looking at 45.8 pips, basically. Okay. Well, if you're trading, you know, a standard lot, it's going to be $10 per pip. So that is only $458 of risk. Hey, that's not right. Is it? No. That's better. $4,500 of risk. So if I want to reduce my risk on that area, I just go to a smaller time frame. Let's say I go down to the daily. This was when? October 22. Probably should pick a closer time frame, but yeah, we're okay. Same area. On the daily, I can reduce that risk. So now we're looking at it's actually more 152 pips. So that's not the best example because it's a little bit bigger risk. But again, if I'm trying to whittle down the risk, I just go a smaller time frame. The zones will be smaller, therefore your entry and stop will be closer. And of course, the smaller risk, smaller rewards. So if I keep doing this, maybe going down to a 4-hour time frame, going back to October of 23 or 22, excuse me. There it is. Same area. And well, the zone's already been tested on this one because it was back here. But again, if I'm using an example of a zone, I don't know if this has gone forward and worked or not, but let's see what's the high. 102, 219, 22. Yes, that's in there. Now the zone is much smaller, which means I'd have less risk. So there's a couple different ways to adjust the risk. And it's not just time frame, but time is one of them. You know, the higher time frame you go, the more risk you'll have. Smaller time frame, smaller risk. So you can find zones on any time frame, it doesn't matter. The other way you could do it is size. You know, we could trade, in this case, we could trade standard lots, mini lots, micro lots. So we can change the value of a pip to 10 cents, $1, or $10. So you can adjust that. So that would be the number and size, or I should say type of contract. If you're trading futures, lots, or shares, depending on what it is you're trading. And no, I'm talking everything. This works for anything. Yeah, if you're doing contracts, you could trade mini or micro contracts. If you're trading Forex like this, you could trade standard lots, mini lots, micro lots. If you're trading stock, well, a share is a share. So you could trade different time frames in that case. And the last one, by the way, is duration. This is the only thing we really have control over. And that's how much we're going to lose. How much risk are we going to take? You can't control whether the markets go up or down. If you can, please contact me. Okay. But no, we can't. We can't control whether we're going to win or lose, just how much we lose if we're wrong. We control the risk. And those are the 3 ways to do it. The longer you are in a position, the longer duration, the more risk you have, and vice versa. So getting back to the rating here, duration in this case is not holding the trade. It is how much time that zone, or sorry, how much time price spent in that zone before we left. And if we just look at the zone itself, that's actually my leg in. We have 1, 2 basing candles and then our move out. So 2 candles, well, that's 1 to 3. That would give us a score of 2. But here's a problem. Looking at this, we were in that area for quite a while, weren't we? Before that pop to the upside. So to me, that's not a very high quality. We went more than 7 candles sideways, didn't we? 7 or more is a 0. So honestly, that is rated a little bit lower now because of all that time behind it. Not just the zone itself, but just that whole area. Anybody who wanted to buy in this range could have done it already. They had plenty of time. If we were rating this one, well, we were moving up a little bit, but same problem. We did spend a lot of time in that area. Right here, we have 1 move up, basing candle, and rally. So that would probably be scoring a little bit better. But again, I'm a little concerned about the time spent there. What I'd really like to see, I don't see it yet. Something like this. If this were a supply zone that I was using, come on, moved up, 1, 2, moved away. We didn't spend a lot of time there. So anybody who was interested in selling at that price level, only the first come, first serve got in. And if you did limit orders or you weren't filled, well, you got to wait until it comes back. Now, it didn't work because the trend was up. It did stall price a little bit. Notice, stalled just before, we stalled while we're in it, but it didn't hold because the trend broke it. Okay, oh, not that. Go back to where it was. And yeah, this one is not a very high quality because of the fact that we did spend a lot of time there. Well, how do we leave the area? And this kind of goes back to the structure that I look for. Did we actually have follow through? So did prices not only break prior highs, but did we actually get a leg candle and follow through with new highs? We did in this case. You can see we have this move up out of the basing. We had new high, that's good. The other example, there's my move up, new high, new high. That also followed through with 2 candles after the leg out. So that gets a 2. Opposing pressure. But again, I want a big imbalance. That's why I want to see that we move and we have follow through with it. Not only that, but I don't want to see any kind of selling pressure that might hold us back. I want to make sure this is a very strong zone, that we left this with a huge imbalance. And one of the ways I can see that is you take the height of the zone. It doesn't have to be exact. In this case, it will be. Let me change something there. There we go. Now you can see a little better. So that's the height of the zone. And basically what I'm going to do is look 1, 2 times the height of the zone as we left the zone. I don't want to see anything telling me that there's a lot of selling pressure there. I want to see bullish pressure that pushed us out of that area. If it's a sell zone or supply area, here's that one. Oh, right here, that marked. Same thing. I want to see as we leave that area. This was the height of the zone. Actually, I was using that right there. So as we leave that zone, I should see nothing but selling pressure within 2 times the height of the zone. Well, we get a little bit of a bottom wick, but not bad. If I see a lot of pressure pushing up, that means it wasn't a very strong imbalance. Or, yeah, I was going to say, see if there's another one. Actually, here's an example of opposing pressure. If this is a demand zone that I'm using, we have rally, base, and rally. We did follow through to the upside, so that initially looks okay. But then if I take the height of the zone, oops, oh, shoot, what did I do? There we go. Nope, that's not the one I wanted. There's 1 time the height of the zone. And we already run into a problem right there, because as we left the zone, notice we have a big top wick, right? Top wick, a top wick on a candle or topping tail is selling pressure. That selling pressure, I can zoom in a little more, right there. That's selling pressure. I know it's selling pressure because prices were pushing up. This was a green candle at one point, big green candle. And then prices started pushing down because the buyers gave up and the sellers pushed the price down. And, well, we don't want sellers in our demand zone. You can see it continued here. So this is not a great demand zone because within 2 times the height of the zone, there was opposing pressure. As a matter of fact, we didn't even get 1 time the height of the zone right there without having a bunch of opposing pressure. So the original zone that I was analyzing, way over here, you can see we had the height of the zone times 2, and we don't have any opposing pressure. Oh, sure, it's still rallied, but that's not the actual demand that I would use if we return to that area. That's the key thing. Even though this did rally, it rallied from here. So to me, the actual imbalance origin, whoops, if I was looking to buy again, if it comes back there, I'd buy in this area. Why? Because that's the origin of an imbalance, not down here. And if you wait to try to buy at the lower area that's not as good, probably miss out because prices are likely to bounce here instead at 78.83. Now they haven't come back there yet, so we don't know. But you got to make sure you find the right opportunities. And again, you rate them. So running out of time here, apologize. But again, if you want to learn more about all this and the details, easiest way to find it is right here in the E-mini think tank. Right? If you join me there, I think we had the link up earlier. We'll put it up again for you, I'm sure. But yeah, if you go to that, click on that link. You see, can I copy it or not? Yeah. Oops, copy here. Paste. See how that works. Anyway, there you are. So if you register, there's two ways to do it. You can do quarterly or you can do monthly. If you do the quarterly, you actually get a free 2-week trial. So we don't charge you until after the 2 weeks is up. So there's nothing, no risk if you want to try it out and see if you like it. And you also get full access to everything, by the way, in the 2-week free trial. So you'll have access to all these documents, all the lessons, all that good stuff. So you can try it out. Anyway, opposing pressure on the one I was rating here. There it is. You can see that we had no opposing pressure within 2 times the height for the most part. Just make sure. Use this darker square. So here's the zone, and there's the height of it based on the way I rate those trades. Get rid of this guy for now. And copy one. Let's drag this one up. And 2. And you can see it's all green, no big topping tails, we're good. So 2 times the height of the zone, it's pretty clear. We get a 2. Total score so far is 7. And then have we used this zone? Remember, we want leftover orders that are going to help us move. Well, this was another problem with this one. Right here, as we were forming the zone, we tried to leave and came right back. So technically, that's tested the zone. If that hadn't happened, that wick wasn't there, we just had the green candles that left, then the current move would be the first time into the zone. And that's what you really want because that's where you have the most leftover orders. If you think about it, because prices left the zone, let's clean this up. There we go. Outside? No. Anyway, when we came back and retested the zone, really what prices did was fill any buy orders from 80.65 down to 80.55. So in reality, my zone was not that wide anymore because all those orders were wiped out and the zone itself is now only that wide. And that's actually where we're bouncing, isn't it? We've actually wiped out all the orders. Remember, we spent a lot of time there anyway. So this one is not the first return to the zone. So we can't get a 2. It's the second time, but the first test should not go more than a quarter of the way into the zone. Well, that first wick right here, when I had the zone originally drawn, that was almost halfway in. So that means that is not a good zone. According to the rating, that gets a 0. My score is 7. Now, what do I do with that? Well, there are different ways of entering into a position, and I actually have them right here. Okay, we have limit entry, zonal entry, or confirmation entry. What they actually do and how to do that, again, I teach that in the E-mini think tank. We, as a matter of fact, just covered that this week a little bit. I'm going to be repeating it again next week as we go through this document in the class a little bit more in detail and practice using the actual trade ideas that we were putting out. So in this case, we have a 7 or greater, means we have to do confirmation type entry. If it's scored high enough, let's see, I'm still working on this part because I didn't have the code right. Oh, wait, no, I didn't want to do that. I want to do 1. There we go. Still confirmation entry, but if it goes high enough, now I get a zonal entry. So I do that, and I talk about the order type and how to actually enter. So again, I'm expanding this particular document and working on that. But if you like what you heard today, again, you can join me. I'd love to have you in the E-mini think tank. You can use the link that I put up earlier. Actually, I'll put it up again for you. If you have questions about what I went over, you want to learn a little bit more, keep it yourself. I don't care. No, I'm kidding. Just email us. I mentioned before, support@wealthbuildershq.com, right there. And I hope to see you again soon. You can see some of the other videos I mentioned before. If you go to YouTube and take a look at the Wealth Builders HQ channel, they should have a lot of those videos up there. It talks a little bit more about the order and balance that I was doing. But again, the best way to get a lot of that education and help if you need it, especially in the futures market, this also works in other markets, as I said before, you can go ahead and join me, and you got all that information right here, bonus videos, tools that I put out, and other stuff that I try to help. I try to share as much as I can. So I got to get going. Everybody have a great rest of the trading day. Have a great weekend. And hopefully I'll see you again in the E-mini think tank. So take care, trade safe, trade well, everyone. Take care. I'll talk to you soon.